It only took a few days for ELF to drop even further, with the stock being down even slightly over 5% last Monday. Now this was reason for me to increase my holding in ELF, as it is now at about 4.3%. And then I also got asked if I saw the coming earnings report as the most important indicator of where the stock is going, and I will explain my thoughts on that. But I will start with Kering, because a day after explaining why I bought the stock, it dumped about 7% right out of the open, as the entire luxury industry had a setback in stock prices. Now the fun part about it is that it doesn't even directly influence Kering at all, but it got hit the hardest. Now, at the end of the trading day on Tuesday, we also immediately got reports that the EU was standing up already. And at the same time, we also got the news that Kering is replacing their CEO after slightly more than a year. So, I will explain what's going on there. But if you feel like you learned something new from my videos, you got new insight from them, a new perspective, then make sure to subscribe to my channel in order not to miss any of my future content. Now, let's just dive straight in. Now, like I said, Kering is replacing the CEO of Gucci. And the outgoing CEO has held that position for about 15 months, so slightly over a year. But what's going on there? Because the story actually happened before. Now, in July 2023, we learned that the old CEO, Marco Bizzarri, is, leaving Gucci. He was the CEO of Gucci since 2015 and he has led it until 2023. And the reason for leaving was that the growth was slowing down. He brought enormous growth to Gucci, but then in 2022, the company barely grew and changes needed to be made. So that's when they moved on. And this is why Gucci installed Jean-François as the CEO of Gucci. Now, Jean-Paul joined the company that would eventually become Kering in 1991. He joined Pinot Group, which became PPR and then became Kering. Now then, in 2005, after overseeing Kering's mergers and acquisitions, Jean-François became the group CFO in 2005, before becoming the group managing director in 2008. So, he has been with this company for long, and he became a interim or deputy CEO of Gucci in order to clean up the business, to get new management in there, appoint new persons to new positions, or fire a bunch. He had to get the organization back in shape. Now, including in this transition, was finding a new longer-term CEO. And that CEO became Stefano Cantino, because he was appointed to CEO of Gucci, but he has been there since May already. I mean, that this news isn't all that shocking can be seen in the reaction from the share price, because the stock is up about 1.2%. Now, other luxury stocks are having slightly weaker days, they're about flat, so it is showing somewhat of relative strength. But I mean, he was with Gucci already since May. So it's not that it's that big of a news item, right? But it does give a bit more certainty into the future direction of the company. Because what they say is that Kering today announced the appointment of Stefano Cantino as CEO of Gucci, reporting to Francesca Bellettini, Deputy CEO of Kering in charge of brand development. Stefano Cantino, who joined Gucci in May of 2024 as Deputy CEO, will have a seat on Kering's executive committee, and he will succeed Jean-François Palus as of January 1st, 2025. Now, Jean-François had been appointed CEO of Gucci in July 2023, with the main goal to set up the foundations of Gucci's next chapter and hire key talents, including his successor. Now, this is what I just mentioned, that Jean-François basically was directed CEO or deputy CEO in order to transition the business. Now, Francesca Bellettini declared, "I am deeply grateful for Jean-François for his dedication and loyalty to Gucci." Okay, so that's the political part of it. Now, what is more important is about Stefano Cantino, because he joined Gucci in May of 2024, like I said, as deputy CEO following a 5-year career at Louis Vuitton. So, one of their main competitors, right? Where he oversaw communications and image. Prior to his time at Louis Vuitton, Contino, graduate in political science from the University of Turin, spent 20 years in the Prada Group, where he held positions in increasing responsibility in marketing and commercial communications in his role as Director of Communications and Marketing. Now, his appointment comes with a very clear task, and we can see that here, as they say that the announcement comes as carrying home to other brands such as Balenciaga and Yves Saint Laurent seeks to inject new life into Gucci and reduce its reliance on seasonal designs and younger, less affluent customers, and instead focus on high-spending, aesthetically conservative customers. So simply said, they want to target more of that, all that kind of old money style is my guess how we see it now on Instagram. In my Instagram, an entire hype, I think. And I really like that. I think that really suits Gucci as the brand and the brand name that it has, the brand value. I think that a lot of people will like the direction that is gonna be with a brand like Gucci. But under a video of mine, a few videos back, my last Elf Beauty video, I received a comment asking me, would you say that the next earnings report is the most important indicator of where this company is headed? And I figured I'd share a bit of my thoughts. Now, I want to go into a full earnings preview, maybe in a later video, because I think that will deserve a video in and of itself. But I can take you through my thoughts or through my initial thoughts before diving too deep into what is expected, where I see trends going, and all of that good stuff. Because the latest news for Elf Beauty is that UBS adjusts its price target to $150 from $230. But they do maintain their buy rating. Now, I do believe that this is kind of the easy thing to do. Because if we look at the average price targets, I mean, we have seen some upgrades in August, which I found quite odd. But still, ever since then, the price targets have been decreasing for September. This is the average, and it has been coming down from over 220 to now being 193. So that's what I mean by saying that lowering the price target is the easy thing to do. However, let's just run through it again. And I'm gonna do this really quickly, right? We now have a forward PE of 29, which is quite low historically, but for good reason. We have an increasing short interest because we are now at 8.2%. We can see how this is spiking actually. That might be interesting to look at. I haven't seen this yet. So what we can see is that the short interest is coming up from July about 4%, slightly under 4% to now over 8% ever since September. So the short interest is getting quite high up there. But then again, I mean, over the last month, it has been quite an easy short, right? Now, the reason for it is the growth, of course. I have mentioned this many times, but the growth is expected to be 35% year over year, 34.5%. I think this was even at 35 expected. We are now at 34. So I believe it has come slightly down, but in order to check, I will have to look back at my old videos. Now, the quarter over quarter decrease will be 10%. However, let's not get too ahead of ourselves. This was also the case in Q2 of 24 and possibly even the year prior as well. Here you see a slight decrease in Q2 as well. So that quarter over quarter decrease is nothing to worry too much about, although right now it is at 10% instead of 0.something%. So it is slightly more. What we can say, however, is that the EBITDA, that one is going actually down year over year, and that is something we are not quite used to seeing. And with that also comes the net income, which is expected to be only 25 million. I mean, that's not that much, right? We have a net income margin of 8.8% expected. I mean, that's quite low. On the other side, it does end up quite well for beating the expectations. But I mean, this is not high, right? And an EPS number of just 44 cents, a year-over-year decrease of 46%. I mean, that's not looking all too great for the business, at least. However, like I said, I did add some Elf Beauty to my portfolio because it's now at a 4.3% weighting. And this used to be 2 point something. It used to be the lowest holding of mine, or the lowest weighting in my portfolio. And I mean, that's not the case anymore, right? I mean, it's not that high of a weighting, but it's not the lowest anymore. Now, what we can see is that Elf Beauty is the company with the lowest market cap that I hold at about 5.9 billion right now. But to give you my opinion, whether I think that this is the single most important earnings report that will be indicative of where this company is heading, I think it's not the most important one, but it is a quite important one. And my reason for saying so is that, well, we see that growth coming down already. We have not had that big of, well, revenue expectation increases, guidance increases. And I think that that is what this stock really wants. Now, if they give that, then sure, fine, then this will direct it back up. If they don't give it, I don't know how bad it is. I will have to get my thoughts completely straight on that, and I will give that to you in a separate video where I go over Elf Beauty once again, where I go over the entire thesis that I have, and where I go over my expectations for that earnings report and what I want to see from them. Also, what I expect the reaction to be in certain scenarios, certain numbers they give, certain guidance they give. Now, then there was one last thing, because we have now about a 7% cash balance weighting in my portfolio. I have been deploying some cash, and well, mostly through Elf, but also a bit through Celsius. And I mean, Carrying also got a bunch of it. So that are the three stocks I have been buying, and I have been buying quite, well, I would say quite heavily, relatively quite heavily, right? So my cash balance is coming down slightly. And the reason for that is that I think that the markets overall, they may be quite hot. However, the areas where I'm looking, I think are not that overvalued. I mean, Celsius, they just went to a third of the price they were half a year ago. Elf Beauty has gone down quite a bit. And I mean, Carrying has been down for the past 3 years. So those are the stocks I'm buying. The stocks I'm not buying, Monday, for example, I'm not buying. SP Global, I'm not buying. So I do think we are still in quite a difficult situations with the market. I think we are still at quite a difficult spot. However, data has been coming in quite well. So I can say I'm waiting for something to happen in the economy. But as long as it's not happening, I'm just putting cash to the side for I don't know what. So I've been decreasing my cash balance slightly. This is going to be a bit of a week by week basis. But for now, this is how I'm thinking about it. Deploy it slightly, do a bit of more deployment than I put into my account, in order to bring that cash balance slightly down step by step, but not to just dump it all in there at once, and be a bit careful. See how the data points keep coming in. That's my strategy for that. Now, tomorrow we will see Domino's earnings. Those will be very interesting to see what they say about the consumer, and as well the bank earnings, which will start on Friday. And then we are officially off for earnings season. Now, thank you for watching. That was it for today, and I hope to see you in my next video.